Good morning, everyone. It's Wednesday morning. I just want to give you an update on the US markets coming to your breakfast and the European Open. So we had some positive Chinese data overnight. So we had some narrowing decline in Chinese imports and a rebound in Chinese exports. This is very important for emerging market currencies, for small economies. And if you remember what the Fed said, the Fed was very concerned about global economy and making sure that any moves that they make don't derail the global economy, right? So if you're going to start to see and this could be only one small stone, one small step in a positive direction, doesn't mean to say anything else is going to be positive. But if you're going to start to see a positive economy growing from China, then you're going to start to see blossoming emerging market economies, and you're going to start to see a snowball effect in the economies outside the US, right? So I'm probably outside the G7. Now, why this is important, and you can already see this in the US yield curve. So what have I got here? My same setup. This is the reds greens pack spread. So remember what a pack spread was? Basically, if you buy one of these, you buy one of each red 1 year spread in one lot, right? So if you take yesterday, sell off in the outrights, based on just a sell off in the outrights, and this is why it's important: bear and bull flattening, bear and bull steepening, right? So what you're seeing here in the reds greens pack spread, so reds to greens, so your front middle red is like the SEP 17, SEP 18. This is unchanged, right? So yesterday, if you think about yesterday it was steeper because it was just a sell-off, right? So normal outrights down, curve up, right? So different type of data, more important. Driving the move down causes different impacts. So here, this is a slight change, right? It's a slight change on a slight change of economic optimism from China. And you can see that in this spread. So this is unchanged, right? So that's my first clue that something different's happened. Then you go into the greens blues spread. This is trading down a half, right? So that's flatter. Not a lot, but it's down a half on the day. Now, the blues golds, that's down 1.25, right? So that's a little bit more aggressive than the last few days. So that's down 1.25 on the day already. And this is only 10 hours into the trading day before Europe open. This is your golds, purples, and this is down 1.5. So you got a big flattening at the back, or mildly big flattening at the back of the curve, and then right out the back of the curve, this is down about 1, which is the orange purple. But I don't think we need to be concerned ourselves about. So here you've got 2s, 10s, you've got 5s, 10s, 10s, 30s, and 10-year versus. So you've got 10s, 30s, and you've got 10-year versus alternate. Remember I told you that is really the 7-year, 10-year. So what you got here in 2s, 10s, which wouldn't have happened yesterday, it would have been steeper. 2s, 10s is slightly down, right? 5s, 10s, down half, down 3/4. That spread is down. 10-year to 10-year, which is the 7-year to 10-year, down 1.5, down 1. And then the 10s, 30s at the back end of the curve. Remember I said about blues golds down 1.5. 10s, 30s down 3, right? So, and already that was down. So what you've got here, you've got a flattening in the back end of the curve, with the market get a little bit feverish about potentially, if China, basically this is what the market's telling me, if China recovers sufficiently, this brings at least one or more hike back into 2016 that wasn't there. You're going to finish up with the 2-year and 5-year US TED spreads. Well, yesterday it traded barely traded the US 2-year in a range. Of course, I was talking about I'd like to sell up to 80 because 88.80 because of a down move in the outrights. Maybe we managed to sell 79.5 again, right? So you've got an outright direction in the bonds and the treasuries. So I'm still looking to sell rallies in this 2-year note, this 2-year TED in the US. Now, on the flip side, what you've got here is on the ED versus the 5-year. Now, this is slightly different, right? So remember I talked about just earlier in this clip about how the US curve at the front of the curve yesterday steepened with the sell-off in the treasuries. Today, it's not down, right? It's not flatter in 2s, 10s or red screens, but it's not higher. So, with the down move in the outrights, because of that, because remember, this 5-year TED, this is the chart here where my mouse is, this is tracking 2s, 10s. This is a curve play. We think about the outrights, but really it's a curve play because the outrights move the curve depending on the economy, right? So here you've got, it's trading 274, 36.5. Now, if the 10-year note's trading 130, 14.5 right now. Now, if that trades down to 130 even, and you get a little bit of steepness in the 2s, 10s and red screens, I think this should probably trade up to 274.40, 274.45. It would have an upward direction. Now, for instance, if the 10-year treasuries trade upwards, if the 10-year note future trades to the downside, but the 2s, 10s and red screens don't steepen, what I would expect is this to be caught in a range of 274.40 down to 274.30, and I'd like to play that range. Remember, this TED trades with the curve rather than the directions. We look at the outrights. To give us direction, but those outrights are changing the shape of the curve. And that's important. Right, well, good luck everyone.